Well, hello there. So in this module, we're going to be looking at Krugman Module 10, and this one is all about GDP. So the beginning, it says, explain why three methods of calculating GDP produce the same estimate. Now, if you remember in one of these videos, I told you you only have to worry about the income and the spending approach. And so for this problem, we'll just kind of say, here's why these two things are equal. The income equals the spending, we would say, because every dollar spent becomes income for someone else. For someone else. And that's really at root what we're talking about when we say the kind of circular flow. It's that money is going to flow through this economy. And so if we kind of press pause on the flow and we say, how much is here? It's going to be the same amount if we let it flow all the way back to the other side and we count it on the other side. So the income and the spending approach is equal to the same thing. So we've got wages, rent, interest, and profit, and that's equal to consumption plus investment plus government spending plus net exports. Okay, question number 2 says, identify each of the sectors to which firms make sales. What are the various ways in which households are linked with other sectors of the economy? And so we would say, firms sell to, first off, we know they sell to households, and that's part of the circular flow. But second off, we know they sell to other firms, and we know they sell to the government and the international markets. And so we could really actually say they sell to all 4 of those. The second part of this question says, what are the various ways in which households are linked with other sectors? Well, households, right? So we kind of say A and B. Households linked to firms via their sales and working for them, working for firms. So we would say that, we have that factor market interaction, and they're linked to government via taxes and transfers. There's a lot of words in this one, sorry. Number 3 says, consider figure 10.5, explain why it would be incorrect to calculate total value added as $30,500, the sum of the sales price of the car and the car's worth of steel. So why it would be wrong, if we're kind of going back up, we look at this is figure 30.3. If we said, like, well, what's the total amount of GDP in this economy? And so what they're saying is like, normally you would like just say the final GDP is 21,500, because the only thing that in all of this is the final good is the car. If you've read this section, it talks about how they take ore and they turn it into steel and then they turn it into the car. The only thing that's a final good or service is the car, so 21,500. And the mistake that they're making in the previous one, why it's a mistake, is they're adding in the cost of the steel. Well, the steel is an input good, right? So we'd say wrong, because steel is an input good. It's not final. And so GDP is really only about counting those final goods and services. And so the 9,000 in steel wouldn't be counted. It's an input good. Okay, now let's take a look at multiple choice. And I'll just forewarn you that one of these multiple choice questions I have beef with, and we'll talk about it. Number 1, which of the following is true? The simple circular flow diagram includes only the product markets. That's not true, because it has product and factor markets and financial markets usually. Second, includes only the factor. Well, no, because it includes both of those. Third, it's a simplified representation of the macro economy. That is true, so 3 only, C. Number 2 says GDP is equal to the total value of all goods and services produced in an economy during a given period. So close, and a lot of students get this one wrong. You're not going to get this wrong. A is not true. It's not the total value of all the goods and services. Remember, we just now talked about it doesn't include the steel. It doesn't include like input goods. So it's not all goods and services produced in an economy. It's just the final ones. So we rule out A. B says GIG imports. No, we're leaving out consumption. That's weird. Total value of intermediate goods plus final. No. Total income received by producers of final goods. Well, it's not just that. It's the income from all the factors. So it's not just D. E, none of the above. All right, number 3. That's a tricky one. Which of the following is included in GDP? Changes to inventory. Well, that one is included. So A. So that's, by the way, the most commonly missed one is changes to inventories. And this is the idea of like, well, at the beginning of the year, you had 5 million in inventory. At the end of the year, you had 8 million in inventory. So there's a change of 3 million. And that gets added to the GDP for that year because you produced it, you just didn't sell it that year. Because really GDP is about like how much did you produce within a given year? And so if it got made during the year, but you just didn't sell it yet, then you would add it to that year's GDP. In the following year, right, then it kind of gets accounted for in the consumption and all of that. So that's why we count inventories, and changes in inventories is actually technically what we're counting. We're not counting the total amount of inventory, it's the change. So the other stuff, intermediate use, financial asset, all that other stuff doesn't get counted in GDP. Number 4, now here's where we beef, not included in GDP. So the correct answer according to the book is imports, because imports are subtracted from GDP. Get it? Ha! That's bogus, if you ask me. Like they want me to write B. I'm not going to write B. I'm going to put an X on this one because it's a dumb question. But the other stuff is not counted, right? Capital goods such as machine, well, that is counted. Machinery gets counted. The value of domestically produced services, that gets counted. Government purchases gets counted. The construction of new buildings gets counted. Imports are not counted, only in the sense that they're subtracted. So on a quiz, what I might do is take this question and swap out the word imports and actually put like used goods, because used goods are definitely never counted. Okay, getting off my soapbox. Which of the following components makes up the largest percentage of GDP measured by aggregate spending? This one is not that hard. I mentioned it in one of the videos, but if we scroll back up, you can see the CIGXN. C, consumer spending is like $10 trillion. Government spending is 3 trillion. Investment spending is a couple trillion here or there. And then actually the United States has negative net exports, so that drags on our total output. But by far and away, consumption spending is the largest part of GDP in the United States. And it's true in most places around the world as well. So consumption spending. Last but not least, free response. Number 2. Draw a correctly labeled flow diagram showing the flow of funds between markets for goods and services and the factor markets. Add government to show how money leaks back and how it comes back in. Okay, all right. So 2 markets. You have the product market and you have the factor market. And we studied these in depth last semester, labor markets, all that good stuff. Then you've got households and you've got firms. And money flows from the firms into the factor market where they hire workers, and then the money flows to the workers, right? So this is income, wages, rent, interest, profits. And then this is consumption spending, and back again. And so the money flows to the firms. The only thing that we don't have is the government in this one. So you can put government on the outside or on the inside, it doesn't really matter. The money goes both directions, right? You have some people paying taxes and you have some people getting transfers. That's Social Security and that kind of thing. And most people actually get both of some sort. And the same thing is true here, except here you have what we call subsidies and taxes. So we don't have a special new name for like corporate taxes, they're just taxes. So the money goes into the government from taxes, comes back out as subsidies. In addition, the government spends money in the product market, right? The government has government spending that goes into the product market. And we also know that, the firms sometimes spend money there as well in the product market as investment spending. And if we kind of total up all the money that's being spent in the product market, that's the spending approach over here. Spending GDP. So C plus I plus G plus XN. All right, hopefully that helped you. See you next time.